There are three prongs to the stock market every investor must know right now. Treasury Secretary Scott Bessent, who is deemed as the greatest mind in macroeconomics, has noted these three key areas to investing success in today's market. But here's the twist. One of these points is fueling stagflation fears, and the other could spark a gold rush in economic growth and tech innovation. Intrigued? Hang on, because we're diving deep and we have something at the end you're not going to want to miss. First of our three prongs, tariffs. Initially launched to reshore manufacturing, these levies sent a wave of inflationary jitters rippling across the markets. Fund managers even flagged stagflation, which is increasing inflation and slowing economic growth, a real risk for the first time in decades, according to Reuters. But that fear may be fading. A 90-day tariff truce with China and early-stage trade deals with the UK, India, and Japan have lifted some of that cloud from investors, sending stocks up and easing supply chain angst. Still, tariffs can stoke inflation, which could prevent the Fed from cutting rates. Therefore, our big question: can progress on trade deals prevent inflation from creeping up and allowing the Fed to cut rates later this year? A positive CPI print this week showing slower than expected growth in inflation could be showing progress here. For our second prong, tax. Congress just advanced a massive tax bill to extend and expand the 2017 tax cuts permanently this time. Yet that package could add over $5.7 trillion to our national debt over the next decade, according to the CBO Bipartisan Policy Center. But with current debt levels already deemed unsustainable, could this scare the bond market and global investors from investing in the US? Finally, our third prong, and maybe the most important and definitely the most bullish, deregulation. Deregulation would peel back unnecessary red tape, allowing for private sector innovation to run wild. Take autonomous driving just as an example. With new federal frameworks starting to ease self-driving rules, Tesla stock jumped as much as 6.4% in the pre-market off that news alone. And the reason is because it can unlock a multi-trillion-dollar autonomy economy. Therefore, while tariffs and taxes set the stage, deregulation is going to be our rocket fuel for growth for anything from fintech to biotech. So taxes are neutral, but we're flirting with massive debts, and deregulation could be ready to spark the next wave of innovation and growth. So what's our playbook for investors? 1, watch out for news on the global trade front. 2, monitor treasury yields and see if there are any debt-driven surprises. 3, keep an eye on sectors that could benefit from deregulation, anything from tech to financials to energy. If you bake those 3 prongs into your strategy, you'll be far ahead of the pack. Enjoyed this breakdown? Hit the like button and subscribe for more content and to stay informed.